Have you ever had a trading strategy that was working so well that you just knew God had finally blessed you to find the holy grail? To find something that would finally allow you to become a profitable trader, and you're just winning, winning, winning. And then all of a sudden it's losing, losing, losing. See, many new traders don't understand that the market can turn on a dime. Okay. The market moves in three different directions, and your strategy may be designed for only one of those three. Many traders will jump from strategy to strategy because they don't understand that there's only one strategy that can adapt to any market condition. And that strategy is price action trading. Let's go deeper. Hey guys, how's it going? JD here. So in today's video, we're going to talk about market conditions, okay? Because the market can only do three things. And it's very important that you understand as a trader what condition the market is currently in, okay? So the market can only trend up, trend down, or it's in a range. Those are the only three things the market can do. All right, so let me just tell you, I got to tell you a story. It's going to be story time, boys and girls, for a minute, because I want you to understand, how important this is in your trading and in your ability to, at the end of the day, have success. So I'm going to tell you a little story. About 14 years ago, yes, that's how long I've been in this game. I've been in the game about 15 years, but about 14 years ago, when after I first got started, the very first thing I did was, I read a book, Trading for Dummies. I believe, that yellow black book, the Trading for Dummies series. So that was the first thing I did. I read the Trading for Dummies series. But anyway, what I did was I got into robots. Okay. So when I began trading, okay, I started with robots. I can't remember the name of this robot, but I do remember that it was using a martingale system. And what that means is that, say, it would risk $50. If it lost, it would go up to 100. If it lost, it would go up to 200. If it lost, it would go up to 400. If it lost, it would go up to 800. I think it went all the way up to 1600 before it would stop. Okay. So that's the premise of that was the strategy that it was using. And it was traded on four pairs. It was trading on the euro dollar, the pound dollar, the dollar CAD, and the dollar Swiss. It was just those four pairs. And so I started a trading account with $5,000. That's what happened. And tested out this robot. And let me tell you, in the beginning, it was great. Man, that thing was winning. Many times, it would get the win before it made it to like risking 400. So I only had a few scares. I remember one time it got up to 800. That was pretty scary. But the thing was winning. Okay. It was winning. We were making money. I can still remember my best friend who hadn't traded anything yet. He was just like watching, chronicling, like, all right, calling every day. What did it do today? What did it do today? And I'm like, man, we won this much. We won this much. It was a great time. I'm a brand new trader. I got a robot, okay, that's bringing me in money every day. It was glorious. Okay. So I ended up doubling that account. I turned 5,000 into 10,000 with a robot. And it was wonderful. It was glorious. Okay. So my best friend who had been watching and waiting, he was like, okay, cool, man. I see what's going on. I got to get in on this. I've seen enough. You've doubled the account. That's all I wanted to see. Okay. He bought the robot. It was like the robot was maybe 50. I think it was $99. Maybe it was 250. It was the robot was either $99 or 250. Very affordable. Okay. When I tell you guys, the day he bought the robot, I'll tell you that back. When I tell you guys, the day he put money in and hit the play button on his robot, the day he hit go on his robot, we never won again. I swear, it was like we never won again. I don't know if he saw a win. Okay. It was just like what has happened. You know what I'm saying? Disaster strikes. It was unbelievable. Okay. I had been winning for, I don't know how long. I mean, like, I didn't flip that 5 grand real fast. It took a couple months. I'm thinking back, and I'm not for sure, it's so long ago, but it seemed like it took a couple months. Okay. It did not flip. I did not get the 5 to 10 real fast, but the day he went live was the last day I won. Okay. That thing started pulling back. We basically gave back all our profits, and I was just like, I don't know what happened. You know what I'm saying? I'm still trading with my dad right now. It's really his money, and I'm like, Pop, I don't know what happened. We doubled the account, and so somehow, of course, I'm out in the internet. I'm still searching, looking for answers. I go on the webinar, and they're selling this system where you trade by hand. Okay. And so I'm like, look, Pop, man, I'm hearing bad things about robots. This was the second robot we had tried too. And we started with Fap Turbo. Y'all remember Fap Turbo? I did okay with Fap Turbo, but same thing with Fap Turbo. It worked for a while, then it stopped. Right? So this worked for a while, then it stopped. So I'm like, let's trade by hand. So I get this. So I think we bought a $2,500 system that was supposed to give us arrows to tell us when to go. Okay. That system was really based on a breakout strategy. Okay. Never worked. Lost money there too. But here's the thing. I'm telling you all these stories to tell you this. If you've ever had a strategy that was working and then all of a sudden it stops working, it's because the market condition changed. Get it? So every robot is programmed to trade in a certain market condition. Okay. If the market and while it's in that market condition, it may rock. Okay. Like that thing was, I'm telling you, it was glorious. That thing was rocking. We were making money. Okay. But once the market conditions changed, which they always change, nothing stays the same in the market. Once the market conditions changed, man, we started bleeding money. Okay. Losses was too common. All right. Now, once I tried to go start by hand, which I still wasn't truly trading by hand. Yeah, I'm entering in the trades myself, but I was going off of the system giving me arrows. Okay. And it was a kind of, that system was like for day trading, really, where like you would put in a trade at 6 at night if you got an arrow, and you're supposed to let it go until the next day at 6 at night. But it was breakout strategy. It's the problem. So sometimes you be up and then boom, thing come back down on you. It was terrible. It was another waste of money. I threw $2,500 out the door, okay, on their software. The strategy didn't work because it was a breakout strategy. So let me explain to you something. Let me explain something to you. All right, because breakout strategies is very common, popular, bad common trading knowledge. Okay, breakout strategies suck. Okay, is bad. Bad common knowledge strategy is to try to have a breakout strategy as your main strategy. Here's why. Okay. A breakout strategy, I guess, is great if the market is trending and the direction is trending in. I guess it could be great then. But what if the market goes into a range for a month? Tell me what's going to happen. What is going to happen to your breakout strategy if the market goes into a range for an extended period of time? What's going to happen is you're going to get chopped to pieces. Okay. You're going to give back all the money that you won while the trend was going on. You're going to lose it all back while we're in the range. That's why breakout strategies are horrible. Okay. So here's the thing. I'm saying all this to really get to this point. You need a strategy that you can move with the market. Okay. You don't want to be a one trick pony. All right. You don't want to just take breakouts. You don't want to just take range phase. You don't want to depend on a robot. If robots are still out there, I don't even know. But this is why price action is king. Again, I say This is why price action trading is king, because being able to read a price chart, okay, which is what price action trading really is, which is what it really does, it allows you to trade properly in any market condition. All right. If it's trending, if the market is trending up, we're looking for second entry longs. We're looking for higher lows. If the market is trending down, we're looking for second entry shorts. We're looking for lower highs. We're also looking for drop-based drops. If it's going up, we're also looking for rally-based rallies. Okay. If the market is in a consistent range, we are fading the top. When prices make it to the top, that means we're going short, and we're fading the bottom. When prices get to the bottom, we're going long. We're fading the range. So right there, I just explained to you how, as a price action trader, you are able to survive. Let me say that again. As a price action trader, you are able to survive in any market condition. And this is the difference between the winners and the losers. Okay. If you've ever heard anybody say this strategy used to work and then it just stopped working, it's because that strategy is a one-trick pony. Okay. If you've heard people, I've heard this several times from educators who are teaching people how to trade on pocket option OTC. They'll say, oh, this used to work, and then pocket options changed the algorithm, and now the strategy doesn't work anymore. Maybe they changed the algorithm a little bit or something. They probably just updated it to the current market condition and switched the market condition. That can happen in the Forex. That happens in every market. Nothing does the same exact thing, right? So it's not that they just switched up OTC to stop your strategy. No, your strategy is a one-trick pony. Okay, I'm sorry. I'm just calling it like it is. If you read in the price chart, whatever they switch it to, the market can only do three things. It can only trend up, trend down, or go in a range. Okay, and as a trader, you have to know what the market is doing at all times. Prime example: if any of you guys trade the S&P 500 or watch the news of the S&P 500 or just glance at the S&P 500, you already know if you've done anything but buy in the last 3 months, you've been getting murdered. Okay. The S&P has been making new highs and new highs and new highs and new highs. If you've been going short on the S&P in the last 3 months, you've been getting murdered. But if you were taking higher lows and second entry longs, you've been killing it, right? For those of you who follow gold, okay, if you've done anything but bought gold in the last month, you have been getting murdered, right? Gold has been making new highs. You know what I mean? It's not time to try to go short on gold. It's not time to try a breakout strategy might work on gold right now because it's just making new highs, right? You have to understand what the market is doing at all times. And the market can only do three things: trend up, trend down, or you're in a range. Okay. And as a price action trader, it's just beautiful because as a price action trader, it doesn't matter what the market is doing. Okay. It does not matter. We have our strategy. What's the word I'm looking for? Changes. There was a crispy word. It didn't come to me, but we can adapt to the market condition, right? If when I wake up in the morning, I don't know whether I'm going to be going short. I don't know whether I'm going to be going long. I don't know whether I'm going to take a range fade. I don't know if I'm going to take a rally-based rally. I'm always looking for second entries. I'm always looking for higher lows or lower high, but I don't know, right? I don't know going in. I just don't know. The market does something different every day. And for a price action trader, it really doesn't matter. It don't matter what it want to do. I'm going to adjust. I think that's the word I was looking for. I'm going to adjust to the market condition, and then I'm going to trade accordingly. And again, I'm gonna repeat this one again just so you understand it. If the market is in the range, I'm taking range fades. If the market is going up, I'm taking second entry longs, higher lows, and rally-based rallies. If the market is coming down, I'm taking second entry shorts, lower highs, and drop-based drops. All right. So as a price action trader, it does not matter what the market is doing. We understand that the market can do three things, and we will be ready to trade accordingly. Sometimes I just can't talk. Y'all know how I get jumbled up. So as a price action trader, I'm gonna be ready to take whatever the market throws my way because I can adjust to the current market conditions. Oh, y'all thought I wasn't gonna say that about indicators? Come on now. If you're using indicators and you was making a ton of money, the indicators was working, it was giving you great signals, and then all of a sudden, kapooey, the market condition changed. That's the market condition changed, and now that indicator combination is not working as well as it used to. You have to be ready for that. The market conditions do change. One last little thing. Remember that the markets could do something for a long time. Again, the S&P 500, I don't know how long it's been trending up. Gold, it's been trending up for a good, I think, month or 2 months. All right. It can go into a range that exact same time or longer, right? One time Bitcoin ranged for like 2 months. Okay. So these market conditions can last for a very long time, depending on the time frame you trade on. Okay. So you have to understand what the market is doing. But I love when Bitcoin is in an extended range. That's money time. You fade the top, you fade the bottom, and you keep riding that sucker. And them Bitcoin runs be nice and long, man. Hey, check Bitcoin out. Check Bitcoin out when it's in a range. You make good money in a range. You can make good money in a range. Let me say that again. You can make good, let me say it this way. You can make good money in a Bitcoin range. Okay. So just a little tip. But hey, that's the lesson for today. The market can only do three things. And your job as a trader is to know what the market is doing and to trade accordingly. All right. So this is a great time to like, share, and subscribe. I greatly appreciate all of you guys. Please leave some comments in the comment box today if you enjoyed this one. And so, of course, I'm going to do a work study lesson for you so we can look at some market conditions. All right. Let's go read some charts. Right. Let's go read some charts. And I will show you how you have to be able to adapt to the market. Let's look at a few charts. Roll it.
We would like to thank you for tuning in to another Increase episode with JD. If you want to learn how to price action trade, please visit www.jdhyder.com and you will find his brand new course, IOTS, Price Action Trading System. We thank you again, and as always, we wish you increase on the sudden.
Hey guys, how's it going? JD here. In this work study lesson, we're going to be looking at the pound Audi, and it's actually moving great to illustrate the different market conditions. So if using our trusty 21 EMA, our best friend in trading, you can clearly see this was an uptrend, right? If prices are above the 21 EMA, you're in an uptrend. That's how you can easily gauge what the market is doing by just using the 21 EMA. Now, if you want to be a little bit more technical and use a trend line, you grab the trend line and stick it to the bottom here and push right through there. Look, we're trending up. And also, if you want to see the rule of two, this is a trend up, this is a trend break, retest the new highs. That's the rule of two in play right there. And this is a beautiful trend. Notice how the 21 EMA is running parallel to the trend line. So that's why I don't even bother using trend lines. Follow the 21 EMA, you stay on point. So this is a clear uptrend. That's a market condition. So from this time here, 10:15, this is a 1 minute chart. So from 10:16 until noon, basically, the market was in an uptrend. So that's 2 hours. That's 2 hours that if you went short for whatever reason, okay, you took the wrong type of trade for that market condition. All right. So you have to understand the market condition and have a strategy that will adapt. Now, once we got up here, I can easily see that we went into a range. Okay. You know how I can easily see that? Because the EMA started looking like a roller coaster. Anytime the EMA looks like a roller coaster, we're ranging. Okay. Boom. Here's the range. Okay. So now here's the deal. Once the EMA started looking like a roller coaster, if you got some type of breakout strategy, you are in trouble. Okay. So first of all, a lot of people started going short here because they see the trend up. They're counter trend traders and they're like, all right, we've been trending too long. It's time to head back down. They start counter trend trading here thinking they're good. And then they get this huge run up, traps everybody. And it goes all the way up to the top of the range. Makes another new high. Trend up, trend break, retest the new high. This is why we don't counter trend trade. When you seen that this big move up there, take shorts off the table. No, don't even think about going short. And when you get the trend break, for those of us who understand the market cycle, we are always expecting a retest to new highs. So we would not have gotten trapped here. We wouldn't have went short here because we would have been expecting this. So if anything, we take this push down, first down. Excuse me, start here. Push down, first entry. Push down, second entry long, humongous signal candle closed on this top. We go right here, home run. All right. But now once we get the new high, you know, you don't really know you're in the range yet. So you don't really actually get to take this one. So I'm not going to talk about it. You came down, pushed back up again. Now here is actually kind of hard too, but you may have taken this high, lower high in this situation because the EMA is starting to look pretty rangy. And when you push back under the EMA again, you may be figuring like, all right, we're finna drop, right? Comes down, but then it bounces again. But now at this point, you got a touch, and a touch. You definitely can have the range drawn at this point. But you only really get one more trade. I mean, if you go here, you win. This low, push up, higher low, decent signal candle. You go right there, that's a good win. Now you definitely know you're in a range and you can go right here, easy money. And you may even take this high, lower high right here with this beautiful signal candle to close down, easy money, right? But then you don't make it to the bottom. You don't make it to the bottom. So when you push up here, no more, you wouldn't have went short nowhere because you didn't get anything. And this is a breakout. Now this is a clean, clear breakout. You know you've broken out, but you don't go here because you wait for a breakout pullback entry, which you really don't get because this thing kind of chopped around. But there you have it. You was in a trend up, you ranged, and then what basically happened is you broke out again to the top. All right, so let's go see if we can find something going short now. Already CAD. Oh. As soon as I clicked on something, you kind of get the same action here. Same action. All right. Trending down. And notice how I said we get the same action at a glance. I just picked this chart, and because of 21 EMA, I can clearly see what happens. Can you clearly see what already has happened? Pretty self-explanatory. We're under the 21 EMA. We're trending down. EMA looks like a roller coaster. It went into a range. Then what it do? It broke down again. That's, I mean, I don't know. Trend down, trend break, retest to new lows, market cycle. I can't make this stuff up. It just is what it is. Either you believe in the market cycle or you don't. But just look, if you're following the trend and see, and this is, let me explain to you guys why I don't use trend lines. Tell me how to draw this. Should I put it here? Should I put it here? Should I put it here? You see what I mean? See the problem? See the problem? Trend lines, you know, are, you know, it depends on who's drawing it. What's right? Some people say go through the body. Some people go through the stem. Some people say go out the top. I mean, tell me what's right. Tell me, I don't know. Tell me what's right. This is why I just depend on the 21 EMA, you know. As far as I'm concerned, we haven't broken above the 21 EMA. I'm taking shorts all the way down. Okay. You want to see how many are here? Let's count them up. So let's say, look, it starts up here. It starts up here. This was a little range right here. I ain't gonna draw the top of it for time's sake. But here, we broke out the range, right? So if you took this high, lower high right here, boom, you caught it. Then you got another one, high, lower right here, boom, you caught it. Then from this low right here, you actually got to push up first entry. Don't take first entries, but if you pushed up, boom, take this right here, second entry short, boom, home run, you got it. Then you make another low right here, push up, first entry, push up, second entry short, take this one right here, 1, 2, 3, 4, 5. Ooh, you snuck and got that one. But then you got a high, push down, lower high right here, right? The best entries are on, off, or around the 21 EMA. Take this one right here, 1, 2, 3, 4. Oh, that one came back and got you 5. And it happens, right? You don't win them all. But if you take this high, lower high right here, another one off the EMA, 1, 2, 3, 4, 5. You get it right back. Okay, so boom. Then at this point, you know, it got shaky. We started ranging, right? So we trended down. I'm gonna just pull this down, trended down, and now we're ranging again. And it's a tight range, you know, which is why I don't typically, you know, just be dying to trade ranges, especially small ones like this. But look, we're in a range. The EMA is looking like a roller coaster, right? Then what happens? Man, it broke out for real, for real. Look at this first leg, and this is a drop, base, drop, okay? And then then it went into a strong trend. Cause see, it was a good strong trend up here too. This is what you call, if you have never seen one, let me make it a little bigger. This is what you call a strong trend. This is how you trade a strong trend. You take every green pullback. So look, you see this green pullback right here, beautiful candle, take that 1, 2, 3, 4, 5. You see this one right here, take that 1, 2, 3, 4, 5. Wait a minute, I lost count. Did that one work? Wait a minute. Start here, 1, 2, 3, 4, 5. Yeah. Then you took this one, you would have started here, 1, 2, 3, 4, 5. Yep. You see this one, you start here, 1, 2, 3, 4, 5. You see this one, you start here, 1, 2, 3, 4, 5. You see this one, you start here, 1, 2, 3, 4, 5. Every pullback is how you trade a strong trend. And you know a strong trend when you're getting these really small green candles back, and then you get a couple nice strong drops in a row. That's a strong trend. Also, look at the 21 EMA. It is pointing straight down. And now if we draw a trend line on this, you may be able to see a little clearer. And again, it's going to be running parallel to the 21 EMA. So I don't need it, but look at that. Again, where do we start it? Do we put it here? You know, do we put it here? Where do we put it? Now, if you put it here, you actually got a trend down, trend break, retest new low, rule of 2. So I ain't hating on that. But if you put it, you know, you put it here, you just stay under it. But every pullback, man, strong trend, every pullback, that's a beauty. I mean, that's a beauty. Okay. So I'm going to close this work study lesson with a little tip. Okay. Here's a little tip. I don't know. I haven't said this in a really long time because I focus on the market cycle and my sweet spot trade for the most part in my daily trading. But this is just overall price action trading in general that I'm teaching you here right now. Check this out. Not every time, not all the time. Okay. Nothing is 100% in the market, people, right? But I'm going to say this. Many times when you trade down into a range, you're going to break out that same direction. That's a tip for you. Notice how on that, hold on, let me start this. And I'm proving it right here. Remember on this pound Audi, we traded up into the range. We traded up into the range and then it broke out the top. That's kind of like the market cycle. Trend up, trend break, retest the new highs in a way, but you get this pause of a range in between. So instead of like the trend break, and the way I'm describing this, the trend break is the range. And then you get the second leg. This is leg 1. This is the trend break. This is leg 2. It looks a little bit better on this short here. You know, this is leg 1. This is actually the trend break. This is leg 2. Many times the market will move like this. If you trade down into a range, if you're going to take a breakout strategy, take it in the same direction you traded down into the range or up into the range. That's just a little tip for you. That's not 100%, but the more and more you read charts, the more and more you read charts, the more and more you study charts and get your chart hours up, you will notice this is the case more times than not. If you trade down into a range, you're probably going to break out the bottom. If you trade up, If you trade up into a range, you're probably gonna break out the top. That's a legit tip right there. Take that one to heart. Take that one to heart, because it's the market cycle too. Trend down, trend break, retest a new low. Market cycle in action. It just has a big old range in the center instead of it being like a second entry long in the center. It's a range in the center. And this happens more when you're looking at bigger time frames. It's interesting that it happened here on the minute chart in both of these examples, but this was for somebody who had never seen that before. Many times, I'll say it again, if you trade down into a range, you're gonna break out that same direction. All right, so that's the work study lesson for today. I hope you enjoyed it. Hey, if the market can only do three things: trend down, trend up, or range, your job as a trader is to know what the market is doing. And for those of us who have been blessed from on high to learn price action trading, that's no problem for us, because price action trading allows us to adapt to any market condition. Okay, so hit the comments for your boy. I greatly appreciate it. Hit that like button right now. I greatly appreciate it. And hey, I'm signing off. My name is JD, and as always, I wish you increase on the Sutton. Bye-bye. Hey, thanks for watching all the way to the end. If you need to learn more price action trading, hit that subscribe button right now and check this video out right here. All right, my name is JD, and as always, I wish you increase on the Sutton. Bye-bye.